Welcome back. Mr. Vishrut Rana, economist from S&P Global Ratings, joins us on the show because recently S&P Global Ratings has actually upgraded India's GDP estimates for FY24 to 6.4%. However, for FY25, they have cut it a bit. First up, Mr. Rana, thank you so much for making time and speaking with ET Now. Let's begin by discussing your rationale for the increase in the growth estimates as well as the cut for FY25.
Hi, Anisha. Thank you so much for having me on the program. It's a pleasure to be here. So yes, as you pointed out, we've revised up our growth forecast for this fiscal year by 40 basis points. This is largely on the back of very strong momentum in the domestic economy, something that we just heard about also just heading into the break. We do see strong consumer demand in the economy, as well as investment activity continues to be pretty strong. Primary driver is still public capex, but we have seen a recovery in private investment as well. The high frequency economic indicators also looking up. And as a result, we do raise our forecast for this fiscal year to 6.4%. For our fiscal 2025 forecast, we do have a cut in the forecast. There's a couple of factors that are driving it. I'll split it up into the domestic side and the external side. On the domestic economy side, we have the lagged impact of the tighter monetary policy. We feel that that is going to slow economic momentum heading into next fiscal year. On top of that, we have the higher base in this fiscal year as a result of strong economic activity now, and that means that the growth rate is going to be slightly lower. On the external side, we have a growth slowdown expected in 2024 globally, out of Europe as well as in the US, and we believe that that is going to affect the external environment for India, and this is going to slow down activity a little bit in the next fiscal year. But beyond that, we continue to expect pretty strong growth out of India, nearing the 6.5–7% mark.
Good growth coming into India, but I just wanted to scratch that point further when you talked about rate cuts, and we were just speaking with Chetan Iyer of Morgan Stanley a few minutes ago. He's of the view that perhaps from next June onwards, and that's June 2024, we're likely to see rate cuts starting. Is this something that you would agree with as well, or you're seeing rate cuts only towards the end of next year?
No, we would agree with that. I think in the first quarter of next fiscal year, we do anticipate a rate easing cycle to begin in India. There's a couple of factors in favor of cutting rates. The first is that core inflation in particular remains controlled. So we're seeing inflationary pressures come off a little bit. They had spiked a couple of months ago on the back of food prices, and that still remains a risk factor. But underlying inflation has come down to the 4% mark, which is the target of the central bank. And as a result, there's room for the central bank to begin easing policy next year, particularly in the growth environment that we envisage at that time. Another factor worth pointing out over here is that next year we expect global interest rates to be coming off as well. So we expect the Fed to be cutting interest rates toward the second half of next year in particular. And this means that the external monetary conditions will be easing at the same time.
Vishrut, how are you viewing the entire overhang, if I can call it that, with respect to the general elections next year?
Yeah, there's certainly an interesting environment with elections due. One thing I should say straight off the bat is that in next year turns out to be an election year across several economies in the world. So it's something that we'll be watching very closely in terms of developments on the policy path. For India, there's likely to be several impacts in terms of the forward policy direction. What we do believe is that the medium-term growth profile is likely to remain pretty resilient to the elections. We think that there are growth drivers, including the favorable demographics, ongoing reform agenda, steady investment activity. All of these is likely to continue through the medium run, and we still retain our potential growth forecast of 6.5–7%. Even in a volatile year where we have elections and a transition of governments.
Maintaining your estimates despite the kind of volatility that we're expecting. Vishrut, thank you so much for making time and speaking with us. Appreciate you joining us on the show.
Thank you so much.
Okay, with that, we're completely out of time on this edition of the show. Thank you so much for being with us.